Understanding startup investment stages. Startup investment attraction is like climbing a staircase. Each step has different required capabilities and goals. Let's explore the main investment stages together. 1. Pre-seed stage. This stage is the very early phase, where a startup is just concretizing its idea and forming a team. The product or service might not be clearly defined yet, and market validation is still in its initial phase. Main goals: idea validation, minimum viable product (MVP) development. Securing core team members. Key investors: primarily the founder's own funds, family, friends, and early-stage angel investors. Angel investors are individual investors who invest small amounts based on a startup's potential and often provide mentoring. Investment scale typically ranges from tens of millions to hundreds of millions of Korean won. What investors look for: innovation of the idea, market potential, and most importantly, the team's capabilities and passion. Since there aren't many metrics to show yet, the team's vision and execution ability are key. 2. Seed stage. Moving beyond the pre-seed stage, the MVP is completed, and the product or service is just being introduced to the market to gather initial user feedback. Think of it as the time when a seed is planted and begins to sprout. Main goals: market validation through MVP, acquiring initial users and incorporating feedback, concretizing the business model. Key investors: angel investors, early-stage specialized venture capital, VC firms, and accelerators are the main participants. Accelerators often provide intensive short-term mentoring and networking opportunities, along with investment. Investment scale often ranges from hundreds of millions to 1 billion Korean won. What investors look for: the potential for product market fit. PMF, initial user metrics. E.g., number of users, retention rate, churn rate, and the scalability of the business model are important. 3. Series A stage. After the seed stage, where the product service has gained significant traction in the market, and PMF has been confirmed, this stage involves raising funds for full-scale growth. It's when the sprout grows into a stem. Main goals: business expansion based on PMF, recruiting key personnel, strengthening marketing and sales. Key investors: primarily early-stage specialized VCs, participate, and sometimes strategic investors (SI) may also join. SIS are corporations that invest not just for financial returns, but also for business synergy. Investment scale typically ranges from billions to tens of billions of Korean won. What investors look for: clear proof of PMF, significant user and revenue growth metrics, and the scalability and profitability of the business model are crucial. At this stage, concrete data and a growth story are very important. 4. Series B stage. After validating the business model and establishing a market position through Series A, this stage involves raising funds to significantly expand market share and advance the business. It's when the stem becomes strong and branches out. Main goals: market share expansion, business model advancement, preparing for new market entry, organizational scale-up. Key investors: mid-stage specialized VCs and private equity. PE firms begin to participate. Investment scale typically ranges from tens of billions of Korean won. What investors look for: rapid growth rate, competitive advantage in the market, potential for profitability improvement, and operational efficiency for sustainable growth are important. 5. Series C and beyond stages. After securing a strong market position through Series B, this stage involves raising funds to maximize corporate value through global expansion, new business ventures, or M&A. It's when the tree forms a forest. Main goals: global market expansion, pioneering new business areas, additional M&A, preparing for IPO, initial public offering. Key investors: large VCs, private equity firms, sovereign wealth funds, and other investors managing large sums of capital participate. Investment scale typically ranges from hundreds of billions of Korean won and can be even larger, depending on the company's size. What investors look for: solid market position, overwhelming competitive advantage, global growth potential, and the possibility of investment recovery through IPO are crucial. Key strategies for successful startup investment attraction. Investment attraction is not just about receiving money. It's about building strategic partnerships for the startup's growth. Here are some key strategies for successful investment attraction. 1. Think from the investor's perspective. Investors prioritize a startup's growth potential and the possibility of investment recovery. According to my information, just as investors study startups, startups should also study investors. It's important to understand in advance what industries investors are interested in, what stage of startups they invest in, and what their portfolio looks like, then approach them accordingly. 2. Build a strong team and present a clear vision. No matter how good an idea is, if there's no team to execute it, attracting investment will be difficult. It's crucial to demonstrate the team members' expertise, experience, and most importantly, their teamwork and synergy. By presenting a clear and compelling vision, you should make investors feel confident in the team's potential and want to join you. 3. Clear business model and market fit. You need a clear business model that outlines what problem you solve, what value you provide to whom, and how you will generate revenue. Furthermore, it's important to prove that your product or service meets actual market needs, i.e., demonstrate product market fit PMF. 4. Secure concrete performance metrics traction. In the early stages, ideas and the team are important, but as the stages progress, concrete performance metrics traction become essential. You must prove the startup's growth potential with objective data such as user numbers, revenue, growth rate, and customer retention rate. Investors want to confirm a startup's potential through numbers. 5. Engaging IR pitching and storytelling. The highlight of investment attraction is the IR investor relations pitch. You need to effectively convey the startup's core value and growth potential within a limited time. Beyond simply listing information, compelling storytelling that moves investors' hearts is crucial. Prepare a sincere story about why you started this business, what problem you want to solve, and how you will change the world.